The U.S. Central Bank joins President Trump in his push for further deregulation of the financial sector, as well as a broader U.S. economy. One America's Kristian Rouz has the latest on the so-called Trumponomics.
Federal Reserve Chairman Jerome Powell signals a decreased role of the central bank in the regulation and oversight of the U.S. economy over the coming years. Speaking at a conference hosted by the Swedish Riksbank, Powell said he envisions a smaller role of the Fed forward guidance up ahead as the economy continues to boom under the Trump administration.
It's clear that the Fed was actually very happy to let the economy run hot for a little bit, which, given that we talk about the biggest consumer in the world, is good news for emerging markets. It's good news for engineering a soft landing from that mega cycle of financial engineering that was quantitative easing in the past decade.
This comes amidst investor expectations the Fed will continue raising base interest rates and reducing its bond portfolio in a bid to cut its balance sheet, which ballooned fourfold during the Obama years to $4.5 trillion. The Fed's excessive presence in the U.S. economy over the past 10 years has distorted the global markets as well. More recently, several emerging markets, including South Africa, Argentina and Turkey, suffered severe currency crisis, partially blamed on the U.S. Fed's rate policy.
It is America increased the interest rate in order to attract investors to take their dollar investment out of country to return to America, which means that fragile economies, which investments are mainly focused on, foreign direct investments like Turkey. That's why Turkey is highly affected.
Powell's explicit commitment to reducing Fed interference with the economy is seen as beneficial for open markets both at home and abroad. The Fed chair's remarks come ahead a Fed board meeting slated for May the 30th, with the repeal of the so-called Volcker Rule on its agenda. The rule prohibits banks from using clients' deposits for risky transactions, such as trading in the stock markets. The Volcker Rule is a crucial part of the Dodd-Frank Act, a 2010 set of banking sector regulations often blamed for the slow recovery in the U.S. economy during the Obama years due to its one-size-fits-all approach to regulating small and large banks.
I do support a rewrite of the Volcker Rule. I do believe we can do that in a way that's faithful to both the language and the intent of the Volcker Law.
So you would favor exempting more trading, for example?
I would favor tailoring the application of the proprietary
I think
trading.
I would call.
House Republicans have sought a repeal of the Volcker Rule for years, urging a tailored approach to regulating various categories of financial institutions based off their capitalization and role in the economy. Following this week's Fed board meeting, the lawmakers are aiming to include a Volcker Rule repeal as part of the fiscal 2019 budget bill. However, the prospects of such a bill in the Senate are still unclear, as the GOP holds a very narrow majority in the upper chamber, whilst the Democrats are firmly opposed to President Trump's deregulation agenda.
The American people know that 1,000 greedy people who run the Republican Party are running the show here. Yeah, they are. We can beat this bill the way we beat health.
Powell also hinted Fed forward guidance would be redundant if the system of banking supervision encouraged a greater responsibility on the part of U.S. financial institutions for their own actions. Whilst the same principle applies to the Volcker Rule and the majority of other Dodd-Frank provisions, Democrats have long championed a tighter governmental control of the open markets, pushing the U.S. closer to a socialist planned economy model during the Obama presidency.
It's not a rollback, really. It's about a better modulation, finding a better balance in regulation, with a special attention to small and medium-sized banks that were unfortunately caught up in a broader regulatory agenda.
Meantime, despite the Fed's commitment to further raising interest rates, at least two Federal Open Markets Committee members say the rates will remain relatively low for a while, enabling a more robust GDP acceleration as part of the so-called Trumponomics. Kristian, Rouz, One American News.
We can use your help. Call your cable provider and kindly demand that One American News is added to your lineup. Call today.